Right, and how much of it is due to financials? Is any kind of tailwind, although we heard various comments about this, if a Fed tailwind does exist, is it likely to affect other areas of the economy as much as the banks?
Well, in your opening comments, you talked about industrials, and that's something to watch because last week financials reported, and it was, pretty much universally better than expected, and financials are doing really well year to date. But the other group that's very sensitive to the Fed cutting would be industrials, and there's a lot of industrial reports this week. It's about a quarter of the S&P, but I'd say it's so far so good. And again, industrials are doing well in the face of an ISM that's kind of been at rock bottom for 2 years now.
Tom, how much would you ascribe the recent momentum to aspects of the election as that draws nearer, just over 2 weeks away?
I think that's been a dynamic. I mean, I've been fooled by seasonality because I figured from September to Election Day, markets would be very tentative because this is an extremely close race. I mean, this is a coin toss according to Nate Silver. But something that Stan Druckenmiller said last week might explain a lot, that markets are betting that Republicans could take the Senate, and that actually could ignite animal spirits. So there may be underlying momentum that the Republicans take parts of Congress, and that's why markets are bullish.
In this video, CNBC hosts a discussion with Tom Lee, a financial analyst, and Ben Ritus from Mellis Research, focusing on market trends and Nvidia's potential. Tom Lee highlights the resilience of the S&P 500 despite inflation reductions and expresses optimism about industrial and financial sectors. He suggests that decreased inflation has surprisingly fueled revenue growth, with a majority of companies surpassing earnings expectations. Additionally, he discusses the potential impact of upcoming elections on market momentum, particularly if Republicans take control of Congress. Ben Ritus then shifts the focus to Nvidia, likening its current success with the release of the iPhone. He defends Nvidia's high valuation, emphasizing its growth potential, demand for its Blackwell chip, and potential expansion in the cloud computing market. Ritus argues that major tech players like Microsoft and Amazon are heavily reliant on Nvidia's advancements to bolster their cloud services, forecasting Nvidia's continued growth due to strong demand for cutting-edge technology. Finally, Ritus addresses concerns over Nvidia's gross margins, suggesting that while margins may slightly decline with new product launches, they should stabilize. He predicts that Nvidia's growth will persist into 2026, pointing to a significant March event where Nvidia will reveal its next-gen chip, further boosting investor confidence in the company's trajectory.
Let's talk more about where this rally goes from here this morning with Fundstrat Global Advisors Head of Research and CNBC contributor Tom Lee, who recently raised his target to S&P 6K. Tom, good to have you. I loved your note the other day looking at what S&P revenue has done in the face of declining inflation. And your general point is that real revenue has accelerated, and that kind of explains why equities have been so resilient.
That's right, Carl. As you know, many investors and pundits thought as inflation fell, and it's been cut in half in the last 2 years, that would cause revenue growth not only to hit a wall, but that earnings would stall. But instead, S&P revenue growth is going to be over 5% this quarter. And on a real basis, that's over plus 2%, and that's the strongest. It's really one of the strongest numbers in more than 2 years. And so it is a really high quality earnings season so far. And close to 80%, or actually more than 80% are beating earnings so far. So it's a good beat season, but it's early.
Demand for Blackwell, what are you seeing in your channel checks at that point?
It's pretty huge. The big issue was whether they could get the production up and running and get through their mask issue, and they seem to have done that, and whether they can get through the negative mix shift of scaling a new product, and I think they're going to do that pretty well within a couple quarters, and the demand looks really insane, like you said. These big clouds, you got to understand, these are huge capitalized companies, and if they're going to beat their cloud numbers that they're going to show the street, meaning Microsoft, Google, Amazon, they got to buy Blackwell, and they got to get the customers up and running, or else they're not going to beat numbers. And that's it. That's how you get the sequential acceleration to their cloud business. The companies will say a lot of different things that, it's because of how great they are in cloud, but really it's because investors run to their platform to use the latest and greatest from Nvidia. And that's how they're going to beat, and they're going to buy a ton. And pretty excited.
What about their gross margins? There has been some concern recently about whether they could keep up the gross margins or whether they're going to continue to drop a little. And very high levels.
Yeah, I mean, that was our main concern as well. And whenever you launch a new product, and make changes to it, you have to, you even write off some older inventory or inventory that's no longer useful. They had a larger write-off than usual last quarter, but we think that's going to get less and less as we go through. And what we're seeing is them moving past that gross margin issue. So what should happen is gross margins go down a little bit for a quarter or two and then turn. We see gross margins in the mid-70s, which can power close to $5 in earnings power, that they can demonstrate over the next 4 to 6 quarters.
The stock was down about 2% in the calendar third quarter. What about the fourth quarter? What makes you think that this is going to be the time that things really turn around?
Well, I think that the street this time, so last year as well, third quarter is a tough time for semis anyway, and for Nvidia, they tend to do the market tends to really hype things up in the first half and then digest it in the second half. And this year, a lot like last year, what happens around this time is folks start to say, yeah, I know next year is great, but what about the year after, meaning 26? And I think the street this year is going to discount a little quicker that things are okay. They have that huge show in March called GTC, and we think they'll unveil the Rubin chip for 2026 there. They've already talked about it, but we'll hear more about it. And then you realize, oh yeah, 2026 is a growth year, and it's a pretty big one. And the market probably discounts that a little sooner than they did last year because Jensen is obviously gaining more and more credibility, which is obvious.
Are you at all worried? There were some comments out of German PPI was down 1.4 year on year, Tom, but there was some ancillary commentary about worries about a reflationary period, largely due to geopolitical events. We mentioned oil coming back a bit today. How worried are you about that?
Well, I think that headline CPI could definitely get affected because oil moves dynamically and it has an almost immediate effect on headline CPI. And we know transport costs have also spiked recently. Part of it's seasonal, but that affects headline. I think the market's going to be somewhat skeptical that could trigger a sustained reigniting of inflation, but I think the economic data is going to be a little confusing the next couple of months because, the Boeing strike itself is going to affect the jobs report. But I think ultimately the Fed is still on a path towards getting back to neutral. I think that should be the focus, and that means, stocks which have been strong are really still a buy the dip market.
Joining us right now with more on NVIDIA's bull run is Ben Reitzes. He is Melius Research, Head of Technology Research. Ben, you say that when you reiterate your buy rating on this, you get a lot of eye rolls. What do you tell the skeptics who are doubters?
Well, this is like when Apple did the iPhone, and if you gave up on Apple in year 2 or 3 of the iPhone, you missed a lot. So this is really in the beginning, and what people really are skeptical about is the size, and they're already a huge market cap here, but there's still room to go. And obviously, Jensen running around New York meeting investors all over the East Coast, he's got a lot of good things to say. I think that you should listen to him.
NVIDIA, you actually say, is your second cheapest stock in your group. How do you look at it on a PE basis?
Well, I look at PE to growth, and there's a ton of upside next year to our growth estimate, and revenues of 40%, but there's upside there, and there's probably not as much upside in any other stock. So I think it's trading at about 1 times PE to growth for next year, and that's really attractive for a name like this, as long as the numbers are there. And if obviously if the direction is upwards to the estimates, that's really attractive still. And I think that each day you got to walk in and say, what are our checks showing us? What is the research showing us from the bottoms up? And it's still there.
In conclusion, the video highlights optimism for the financial market's resilience and Nvidia's growth potential. Tom Lee discusses how lower inflation has unexpectedly supported revenue growth, leading to strong earnings earnings for S&P companies. Meanwhile, Ben Ritus compares Nvidia's success to Apple's early iPhone days, emphasizing the company's robust demand and cloud computing expansion. Despite short-term gross margin concerns, Ritus is confident Nvidia's upcoming innovations, like the Blackwell chip and new releases in 2026, will drive continued growth. As the discussion wraps up, it becomes clear that both Lee and Ritus see long-term opportunities in a fluctuating market, driven by strategic sector growth and innovation from tech giants. Their insights suggest a strong outlook for investors willing to look beyond short-term volatility. How do you think election outcomes might influence market momentum in the coming months? Do you agree with the comparison of Nvidia's current growth to Apple's early iPhone years? Why or why not?